we are making ledger accounts, T accounts. Another name of T account is called ledger. Let's go back to the original here. So how we are going to post it? So it means cash to common stock. These two are books. So we open T accounts. We also call this ledger, L-E-D-G-E-R, ledger, which means posting. If the question mentions you post the transaction, it means you have to make journal entry plus you need to post to the accounts or ledgerize the entry. Cash here is debited. Write it down on the debit side. Common stock is on credit. So which transaction is April 1? April 1. If you want to find out, okay, this 50,000 is from where? On journal, it is number 1 transaction, April 1. So you go open the books, journal book, go to April 1st, and then you find out, okay, April 1st, this is the transaction. April 1st, this is the third transaction. Right, guys? Understand?
Yes.
Okay. Now the flow of accounting data. How accounting data flows? Number 1, transaction occurs. Then you analyze the transaction, which means which 2 accounts, at least two accounts, okay? There are going to be more accounts as well, but at least 2 accounts. And then you make journal entry and then you post ledger. Simple. So this is for your information that whether double entry system follows the accounting equation or not. So that doesn't mean that every time you have to make the accounting equation as well. No, this is just for to make sure that equation is balanced. We have to follow journal and ledger. That's it. So received 50,000 cash and issued common stock. Which 2 accounts are? Issued stock, which is common stock, and cash. Both are increased. And what is the transaction now? Cash increase, common stock also increase, cash increase, debit, common stock increase, credit. So what we should write first? Debit, cash. And then we write common stock. There is construction going on next door. Let me close the door. Okay, so 50,000. So now we want to check that whether this entry satisfy the accounting equation. Cash belongs to asset, asset is increased 50,000. And this belongs to common stockholder equity 50,000. Equation is balanced. So it means double entry system also follows accounting equation. And what do we mean by the posting? Posting means we are transferring these accounts into their books. So this is the book, cash book or cash ledger or cash T account. 1 April 50,000 debited. This is debit side, and this is credit. This is common stock. 50,000. Right? Let's see that. Right, guys? It means our journal entry and our ledger satisfies perfectly the accounting equation. We also call this balance sheet equation. Now let's talk about the second one. Paid 40,000 cash for land. Now you guys participate. Which 2 accounts are going to hit from this one? Nana, paid 40,000 cash for land.
That's second land.
Priscilla,
Answer.
Mirko,
Cash and land.
land
And cash.
well done. Land and cash. So land and cash. So second step, increase or decrease. Land is increase or decrease.
Cash is decreased and land is increased, sir.
So when cash is decrease, credit or debit?
It is debit, sir.
Cash is an asset account. Asset increase, debit increase, credit. So cash negative, land is increasing.
Cash is credit, sir. Sorry.
Yes,
Credit.
well done. Land increase, debit. How we write down the entry? First, we need to write debit. So which one is debit? Land. We start from land. And then we write down the credit. 40,000. 40,000. Right? And from asset side, whether this satisfies the accounting equation, this is for your knowledge. That's it. Extra. So 40,000 is increased in asset as a land, and cash also decrease. So accounting is, so equation is balanced, simple. So how we are going to post it? So we have a cash is credit, so we write it down. This is 2. Why I didn't write the negative here? Why didn't I write the negative here? Because this is credit side. Credit side already means decrease. That's why I'm not writing down negative here. Land, we open a land register, land ledger or land P account. Land is debited by 40,000. And how we pronounce this journal entry? Venetia, if I ask you to pronounce this journal entry, how you pronounce it? Subhan, PD.
Yes, sir.
Lends to cash.
Well done. Land to cash. Well done. Let's see that. See? Right? So you only have to make one P account of the same cash. You don't have to make every time new P account for cash. No. Only one P account for cash. And then you write it down, increase or decrease. Simple. Now the third one. Purchase supplies for 3,700 on account. Which two accounts are going to hit? Think about that.
Supplies account and cash account.
Supplies account and cash account. So this is on account, on credit, not for cash. Supplies and accounts payable. Remember that one. Understand?
Yes, sir.
Supplies increase, accounts payable also outside the claim because we didn't pay yet. That is our liability. Liability increase, supply increase. So supply increase means debit or credit? Guys, I need your participation, everyone. Supply increase, debit or credit?
Debit.
Well done.
Debit.
Accounts payable increase means
Debit.
Accounts payable, this is our liability.
Credits.
Payable.
That's credit. Yeah.
How we write it down? Can you pronounce the accounting journal entry?
Supplies to account payable.
Well done. Well done. Supplies to accounts payable. How much? 3,700. Right? And if I ask you to post, you make a T account. We don't have supplies account before, so we establish supplies and accounts payable. How we write it down? This is 3. So you write it down 3,700 from third transaction or 3rd April, 3,700 on credit side. This accounting equation is balance. Yes, 3,700 is going to be added to asset. 3,700 is on the liability side. So everything is balanced here. Right? Understand? Now let's move on. Performed services for client and received cash for 7,000. So this is cash sales, cash revenue, right? Because customer paid you cash. Customer didn't say you that I will be paying you later. This is not on account. This is cash. So which two accounts are going to hit? Perform services and receive cash.
Cash.
The second one,
Account receivable.
no, because we receive cash.
Service revenue.
Revenue. Revenue. Revenue increase and our cash also increase. So what is the entry? Revenue increase means debit or credit?
Credit, sir.
All others.
Debit.
Credit or debit?
Credit.
Credit. Well done. Cash increase. Cash is an asset account. Asset increase. Debit. So how we write down the entry? Cash to revenue. 7,000. 7,000. Okay, do we have a cash account? Cash T account before? Yes. And this is 4-1. Cash is increased, debit side, so we write it on 4. 7,000 here. Revenue account. Accounting equation is balance, yes. 7,000. Because revenue belongs to stockholder equity. Here we go. Even if you write down just revenue, it's fine. Okay? Don't get confused. Sorry, it is written as service revenue. If it is written as revenue, it's fine. Okay? So are we clear?